Hey guys, welcome back. In today's video, we are talking about Adam Aron's important message, the short seller's margin called, banks getting short squeezed, and many more in this video. Firstly, we're taking a look at this. A week ago, we announced that more than 4 million guests visited an AMC theater globally over the weekend. This morning, we were able to announce that more than 5.5 million people were guests in our theater this weekend. That is a lot of popcorn. So once again, we're seeing the attendance going at AMC. And what we can expect from that is, of course, the ticket sales, is understanding how we are attracting more and more viewers to AMC. Now, bear in mind that this is done by the improvements that AMC has made themselves. Yes, we have had the power to talk about AMC on social media, but the most important thing to attract all these millions of people are the things that AMC are doing. And so what we can see from this is that these investments, that these improvements AMC are making are obviously doing well. So already from that, the very fact we're looking at 5.5 million, you can expect the revenue. But the revenue is obviously split into many parts. And it's why I think Adam Aron focused a lot about popcorn. He's obviously saying this is a lot of popcorn, hinting at the fact that these guests that were attending did buy popcorn, did buy beverages, and things that we expect for a viewer at AMC. Now, this is something that is going to add on to the revenue of AMC. And I definitely think that this may be something that people are overlooking, that people won't expect when it aids AMC's number. And so this is what we are going to be looking at, not just for this quarter, but going into next year. We are going to be seeing how AMC is only going to double down on this, how AMC is going to really cut their operational cost whilst their revenue is improving, whilst their profit margin is improving, and that's what we are already seeing. And we have to understand this. Firstly, when we take a look at just the overall for this year, we already talked about how record attendance is doing very well. But something else that you have to understand that could have put AMC and the box office in an even better position is the Michael Jackson biopic looks to be over $1 billion globally and was supposed to be in this quarter. That would have radically shifted the conversation on the 2025 box office. Mortal Kombat 2 was also supposed to be in this quarter. The combination of Michael and Mortal Kombat 2 would have meant large growth year over year in this quarter and on the year. Q1 was a bit of a strike hangover in that it saw a lack of titles, which this next Q1 proves on that is not ongoing issues. All things considered, the outlook for 2026 is far superior to anything we've seen since 2019, the biggest box office in 7 years, along with reduced interest rate, increased ad revenue, profitable grocery store popcorn business, and lower debt all means AMC is looking far better in the very near term view. And so just like what we talked about earlier with what Adam Aron is saying, there is a lot more that you have to think about, and not just what happened in the short term, but what he mentioned in the short term and how it affects long term. Because we have to understand the box office has already done very, very well. We've seen how AMC was able to captivate on this opportunity, but you have to realize that the potential could have been even bigger. And so if you think AMC has already done well, just think about how well they're going to be going into 2026. And some of the things that aids AMC along the way, some of the outside factors, is of course things such as reduced interest rates and increased ad revenue. And these are only going to get better. And remember, AMC are paying off their debt. So whilst reduced interest rate is already cutting off the interest payment, while it's already reducing the interest rate payment, when AMC pays off large chunks of debts, that's also going to reduce the interest payment. So going into next year, the cash flow of AMC is only going to get better and better. Now, at times like this, we talked about all of these news with AMC. You can see how well they are doing, but what the media is trying to do, what the institutions are trying to do. So AMC Holdings underperforms Monday when compared to competitors despite daily gains. So whilst we're looking at AMC and how are they doing, just like we talked about with this, just like we talked about with this, we're seeing the news articles still being negative on AMC. We're still seeing how they're comparing AMC to its competitors. So despite how well AMC has done, we're down 3.55%. And they're saying that it's going badly against other competitors, not mentioning the fact about how well AMC has improved, about the potential of AMC, the projection of AMC, not to talk about what AMC's suppression in terms of dark pool, in terms of institutional ownership against its competitors and what that means. It just talks about how it underperforms against other competitors. And so this is something that we have to realize, that when we do see these articles, when we do see these negative sentiment that are trying to do, we have to understand what is actually going on. There will, of course, be bad things that will affect AMC. Now, I'm not saying AMC is the perfect company that makes zero mistakes. However, you have to realize is that the things that we have done are extremely beneficial, are extremely positive for AMC, but yet the media is always trying to put a bad spin on it. A simple comparison. For the first 9 months of 2025, domestic box office grew about 4% compared to 2024. AMC's revenue grew 7% over the same period. For the full year 2025 estimate, domestic box office expected to rise 1%, AMC revenue expected to rise 3%, plus $139 million. So already we talked about how box office, because of the strike, had a bit of a slow, steady pace in terms of Q1. And we saw how that drastically changed after all of the after effects were gone. We see how AMC obviously outgrew that. Not only that, we've seen that in periods of the months this year, how AMC has had a record EBITDA. We're also seeing how they were able to break different records, such as concessions, such as attendance. And all of these things means how well AMC is only going to do and how well AMC is going to be doing in the future as well, along with all of the things that they are still trying to implement, still trying to improve. And so this is something that we know how well AMC is doing, how well AMC is improving, and how it's outdone itself and how it's outgrowing the market. And so with all of that considered, you have to understand what is actually going on. Now, on the other hand, we talked about this. AMC is doing very well, yet what are the long-time AMC short sellers up to? So super short sellers against AMC since early 2021, Susquehanna, now hedged, holding over 2 million long AMC shares with call put options ratios of 2.1 to 1 on another 6.2 million shares. Seems like they flipped long. Now, just like we talked about in the past, all of these short sellers who have constantly been extremely negative on AMC, who have been constantly shorting AMC, you start to see them flip their positions, at least their open public positions. We talked about how in the filings, you obviously can't talk about, you can't see the synthetics, you can't see the naked short. But what we've always seen is that with the synthetic shorts that these guys have created, the public positions that we can see, the public filings, has still shown that they were still over shorting on AMC. But now, as we talk about everything with AMC, as we see all the potential of AMC, we're starting to see them flip long, or at least net long. Now, this is just one example of many. Citadel has also been net long on AMC as well right now. Goldman Sachs have been net long on AMC, but not only that, is the very fact they got rid of all of their short positions to be only long AMC. So we're seeing so many of these institutions long AMC, and it only shows the message, the fact that AMC is a powerhouse. The very fact they understand the potential in AMC and is why they're trying to buy as much as possible. Now, it's not a surprise they're trying to do this, because you have to remember at times how much pressure AMC applied to these guys, because AMC was halted 38 times in one day. And this wasn't about protecting the investors. This was about stopping momentum and shaking retail out. Because we have to realize, if they wanted to protect the retail investors, they wouldn't have halted AMC, because AMC has been majority owned by retail. And so when AMC was going up before the halt happened, it was only going to benefit the retail. The only reason why they halted it was to protect the institutions, to stop them from losing hundreds of billions, if not trillions of dollars. Now, furthermore, we're also seeing something else happening, which is this. Reminder that HYMC moved 0% on Friday during silver's 10% move up. HYMC traded 5.14 million shares, double the already inflated average volume. Now that silver is pulling back, HYMC is moving with it downward but faster on no volume. So for those of you who are keeping an eye on the market, you're seeing how the silver market is reacting. You're seeing the volatility happening. Now, what we are looking at in terms of HYMC is how it's not reacting to the market. Now, many things could be talked about this. One of the things I do want to mention is because of the fact that when HYMC goes up, it benefits AMC. It puts more confidence for AMC. And that's bad for the short sellers. And so if we see them suppress HYMC, they're doing it with the intention of suppressing AMC. And so this could be the reason why. And so that's why we wanted to take a look at it. Now you can see another one bites the dust. Banks failed overnight, names concealed, missed margin call, liquidated before dawn. Now I'm very interested to talk about this, and I want you guys to pay close attention to this because of what it means. Now, what we have is this potential post talking about a systemically important bank, major play in futures, failed to pay its margin call and was liquidated by futures exchange. Now, the reports are concealing the name of the bank, but it's confirmed that overnight the Federal Reserve was forced to pump another $34 billion into the banking system. So this is very important, and the reason why I want to talk about it is who this could be and what it means for us. Now, firstly, you have to realize was that another $26 billion was borrowed from the Fed, the lender of last resort. Now, the reason why this is important is because the repo, like we've said, is something that they talked about with. They don't want this unless it's the very last thing they need. So the very fact we see this go up is already showcasing that they are in drastic need of this. But not only that, is the fact that what this means is when you connect the dot, silver just had a massive rally. COMEX raised margin requirements on precious metals. Higher margins equals trader must post more cash immediately. Cash gets drained fast. Banks scramble for liquidity. Fed steps in with $25.9 billion to keep the pipes flowing. So we know about the margin requirement. We're seeing them get a margin call. Now, what could this mean? Well, firstly, remember that UBS got in trouble for spoofing silver futures in 2018. They now hold Credit Suisse toxic GME legacy swap bags. How do you think this will end? So firstly, we know that UBS was someone that has already been affected by this in the past. They have a history of this. And the reason why this is even important now is because of the AMC and AMC and GME swaps that they hold. So if they are the ones that are being affected by this, which they very well could be, you're going to be seeing a massive amount of AMC and GME swaps to be flown in the air. Now, these will either have to be exposed and covered, or they will be inherited by another bank, which is then only going to take down that bank who inherited it. You can also see this, UBS is both a market maker and a clearing member at the LBMA. UBS also carries its belly in deep underwater GME equity swaps inherited from Credit Suisse. So this is why we talked about with how if they are the ones being mentioned to be affected by the silver call, this is something that it's big. Another thing to talk about this, in 2025, there are 29 globally systemically important banks. We can exclude most for various reasons and narrow to the list to see who is left. No surprise, UBS makes the short list. Ranked number 1 with a silver derivative books and exposure. So these are all showing and pointing to UBS. Now this is very, very important, like we've said, because if UBS are the banks that are being affected, that is getting short squeezed, we talked about how these swaps are going to get exposed. However, there is also another bank that is being mentioned, which is Bank of America. This is a post that we also talked about, which was December 16th. We're talking about how Bank of America is short $44.7 billion of silver with an average price around $25 to $30, with silver then being at $664. We are now seeing it at even higher for in the 70s going into the 80s. So if this is Bank of America who are in this position, who could be getting margin called, this is also important. The reason for this is you have to understand their relationship with Citadel. Bank of America is the prime lender for Citadel, the prime broker and prime lender for Citadel. It's one of the biggest reasons why Citadel had access and money to short and suppress AMC like they have done and like they will do. Now, if Bank of America is getting margin called, causing them to be in a very bad position with their liquidity, causing them to maybe force recalling shares, you can understand how Citadel will be then also put in a bad position and how AMC shorts will have to be covered. Now, as always, none of this is ever financial advice, so do take our consult. Make sure to do your own due diligence and research, and I'll catch you guys next time.